Welcome, everybody, to the ARMR Report. I'm your host, Brett Rosenthal. This show is about investing for beginners. So those of you who are familiar with the ARMR Report, we really have three playlists that we're putting together for you. ARMR stands for Algorithmic Risk Management Research. This is a live trading desk. I'm managing my own capital. I'm surrounded by screens. Sometimes I get distracted. Sometimes I got to pick up the phone. Forgive me. Bear with me when that happens. What I'm doing now is I'm starting a playlist for beginners who want to invest in the stock market. So I call it Investing for Beginners. These are for the Robinhood app users. Okay, guys who are new, guys who are putting some capital to work. Okay. You're at the beginning of your journey. You're investing in stocks at the beginning of your journey. And so I've been doing this 30 years professionally and really my whole life as I grew up in a household that was all about investing. And so I've got a lot of experience. And what I want to try to do for you is share some of that experience in these brief videos and give you things to think about while you're trying to learn how to invest and put capital to work. I want to put you on my shoulders so you can reach higher, so you can start off with information that I had to fight for in the trenches for years. First thing I'm going to tell you, if you're investing in stocks and you're beginning to do it, first thing I want to tell you is all the things you learned at university, you need to forget. This is not an economics class. This is not a finance class. We're in the real world now. All of those things you learned, while you needed to learn them, they're a decent base. They're theory, and they almost have zero relevance in the real world. And that's why I've started this particular playlist and live stream for you. Because I know investing for beginners is difficult. I know you try to take theory, put it to work, and then you wake up and say, hey, what happened to me? I'm going to try to help you avoid that. Okay? Now, I have a website set up, rosenthalcapital.com. I'm going to take you to it right now. The topic we're going to talk about today is understanding that you're going to be wrong on a lot of the investment decisions you make. Accept that fact. Ego has no place in the investing process. So as a beginning investor in the stock market, I think most people feel they have to be right. And then they get trapped into that feeling of not being right, riding the stock down because they don't want to admit that they're wrong. Right or wrong has got nothing to do with investing. I don't care if I'm right. All I care is whether or not I make money over time and whether or not I protect my capital at the right time. So protect capital and make money. Being right's got nothing to do with it. Okay? Now I'm going to explain that. Now, first, what I want to do is just take you to the website. Okay? So take a look at the website here. Okay, this is a source for you guys to use. Okay? Right here is our page at the top called Algorithmic Research. Okay? If you click on that button, you're going to get to some blog posts we put together for you. One is about hemp investing and cannabis and marijuana, which is one of our favorite investment themes. But right down here, it says rules of the road. Okay, you want to click on that. I've been doing this 30 years, and I'm putting together a list for you of rules to follow. What we're going to discuss is rule number 1 today. Now, I started this I think this is our second investing in stocks for beginners video for you Robinhood guys out there and the like, Robinhood gals. This is our second video, and I touched on this issue, but I want to really focus on it today. All right, so When you have time, go to this page on the website. Go look at all of these rules. We can talk about them going forward. If you have questions, please feel free to comment, ask me to go over any of these issues, and I'll go over it with you on future videos. Okay. That first rule, before I ever click the button, before I ever put capital to work, I ask myself, am I on the right side of probabilities and statistics? And is the reward worth the risk? Now, I noticed on the Robinhood app, we could see what most of you guys are investing in. Aurora Cannabis is number one, ACB. Right behind that's General Electric. And I ask you, why are you guys investing in General Electric? Okay? Why? I think behind that's Ford. Really? You're buying a General Electric and Ford because they're names that you know? Because you think they're safe? You want to invest in assets where the reward is worth the risk. The risk should always be relatively the same every time you invest, which means you put money to work and you know what your stop loss is. So number one, get on the right side of statistical probabilities. What does that mean? It means if the stock markets are going down, 7 out of 10 stocks follow the stock market. That's a fact. It's been true since the dawn of time. So you're behind probabilities if you're putting money to work in the midst of a market collapse. You want to husband cash there. You want to wait. Be patient. This isn't a game. I know it's an app and everything, but it's not a game. You got to respect your capital. You want to look to buy low and sell high. So get on the right side of probabilities. But then invest in things where the reward's big enough. I get the Aurora Cannabis investment you guys are making, because cannabis opportunities are large in the next 3 to 5 to 10 years, maybe the next 12 months. But hoping General Electric turns around or buying it because it's a name you know, that's not how to invest. The reward's not worth the risk there. Okay? So getting back to today's topic, it's not about being right. There's some markets, some periods of time where I'm wrong a lot more than I'm right. But you cut your losses quickly and you stay with your successes and you build on your successes, what we call pyramid. And that's how you build wealth. That's how you're successful in the market, not by being right or wrong, but by admitting when your entry point is failing you and getting out and reassessing and looking for a better opportunity. Don't get caught up, guys, in the ego of trading and investing. It'll kill you. You'll have a couple of bad months, you'll get all depressed, and you'll walk away thinking that was a waste of time. And you'll ride stocks down. One of the biggest things you have to avoid as an investor in stocks, you're investing in stocks and you're just beginning now. I'm telling you, one of the number one things to avoid is riding a stock down because you don't want to admit you're wrong. I see it happen over and over and over again for people. They don't want to admit they're wrong. They think they're going to be right long term. The asset goes straight down. They lose their capital. Every position you have to know what your pain point is before you're going to get back into cash and reassess. What is your stop loss? And we can address that in other points if you want, coming up with how do we figure out what the right stop losses are. But it's really a personal thing. There's no one right answer. And for my positions in my portfolio, they vary depending on volatility of the asset, the type of market environment we're in. But the point here is I always know what my risk is going to be before I ever buy the stock. I'm willing to lose X. And when I hit X, I'm out. The emotion's over. The ego's not part of it. I'm protecting cash. The faster I can identify investments that are not going to be successful, the better I'll do long term. So that's what I wanted to leave you guys with today. Focus on that. Focus on getting rid of your ego and worrying about being right, and just focus on executing correctly, getting on the right side of probabilities and statistics, choosing investments where the reward is big enough when you're right versus the risk you're taking. If you're buying things, for instance, like GE and Ford, you're basically buying at best S&P type of stocks. You may as well just buy the S&P ETF and forget it. Find investments where you can have massive success for the risk you're taking, because the risk theoretically will be the same no matter whether or not it's GE or Aurora or whatever. If you're using the right stop losses, you're going to lose relatively the same amount of money. So then I want to get paid multiples on that risk. Okay, guys, I hope this has been helpful. If you like this, certainly let me know and like this video. More importantly, comment and ask me questions so I can cover other things during our playlist, investing for beginners and the Robinhood app and those types of investors. You guys, I'm here to help you. I'm here to share information with you, 30 years of doing this. So reach out and let me know what matters to you, and we'll address it. All right, guys, be safe out there. Have fun.